Hello everyone and welcome back to my new video. You are watching Motivated Investing and now let's get in this video. It is not a new thing for people to invest their money in a profitable source to build wealth. Although all kinds of investment portals come with a certain degree of risk, some are less volatile and can shield themselves against massive economic blows. Therefore, in the 21st century, cryptocurrency and the stock market have emerged as the top investment choice. This has induced a great debate on cryptocurrency versus stocks. Trade has a history as long as history itself. However, stock exchanges as we know them are a relatively new phenomenon. Well, at least 400 years new. Today, with an exchange in almost every country, stock exchanges provide vast marketplaces for the buying and selling of currencies and commodities across the globe, created to facilitate the buying and selling of cryptocurrencies. Cryptocurrency exchanges are an even newer addition to the global marketplace. Cryptocurrency exchanges and stock exchanges have one key thing in common, which is they facilitate trade. However, the way assets are traded, the volatility of the market, as well as a number of other factors are where the two types of exchanges differ. In this article, we're going to explain the key differences between cryptocurrency and stock exchanges. Cryptocurrency has been one of the hottest investments over the past 2 years, and it isn't showing any sign of slowing down. Yet, crypto is the very epitome of a boom or bust asset class. If the proponents behind Bitcoin and other cryptocurrencies are correct, digital currency will go mainstream across the globe, driving prices to further unfathomable highs. However, if you believe billionaire investors like Warren Buffett, cryptocurrencies may well trade down to zero. Buffett has famously said that Bitcoin is probably rat poison squared, claimed that it does not meet the test of a currency, and even that it's disgusting and contrary to the interests of civilization. Whichever side of the argument you fall on, it's important to note that cryptocurrency is a highly speculative asset, and that if you plan on investing $10,000, you should be prepared to lose it. Stocks. The stock market as a whole is a solid long-term investment. However, the emphasis is on long-term. If you're only planning to invest your $10,000 for a few years or less, the stock market might be an investment you should avoid. Not only are short-term market movements unpredictable, but the S&P 500 currently sits right about at its all-time high. Additionally, there hasn't been a 5% sell-off in the S&P 500 since last October, nearly one full year. In other words, if you're looking for a short-term gain in the stock market, you might want to hold off, as risk is currently elevated. However, if you're a true long-term investor, your $10,000 could turn into $50,000 or more after 20 years. With average long-term market returns, stocks represent a percentage of a business. They stand as a company's value and change their price range based on the organization's performance in the market. On the other hand, cryptocurrency is a digital asset that has made its debut in 2009 through the famous Bitcoin. It can be stored and traded digitally. The value of a cryptocurrency varies based on its market demand, supply, and adoption. For many years, people were confined to the stock market investment models, but the recent emergence of cryptocurrency and Bitcoin's price has attracted or moreover, redirected many investors to try their hand on the digital currency market. Unfortunately, that doesn't hide the fact that the cryptocurrency sphere is very volatile and carries potential risks. While Bitcoin has been in the headlines in May for reaching the record US $60,000 within a month, it almost touched the death cross. The stock market is no different. During the early days of the pandemic, S&P 500 has lost over one-third of its value. Therefore, to investors who want to pick the right investment model, the confusion between cryptocurrency versus stocks remains unsolved. Analytics Insight has aimed to decrypt some of the hidden similarities and differences between cryptocurrency versus stocks to make it easier for investors. The parallel line between cryptocurrency and stock investment. The cryptocurrency market has opted for a digital model of functioning since the very beginning, but the story is completely different for the stock market. Initially, financial guides or brokers used to take money from investors and add them to the stock market. Fortunately, the scenario has changed when the stock market also threw a complete transformation. Today, both cryptocurrency and stocks can be accessed through the digital exchange, brokerage account, mobile application, or other online platforms. Besides, they also offer a similar kind of user experience in terms of layout, trading options, and order book-based liquidity mechanism. Retail trading options open the door to general trading orders like a market order, limit order, and stop order. Even though both cryptocurrencies versus stocks might look similar from the buying and selling point of view, they have underlying differences that need to be addressed. The difference between cryptocurrency and stocks. While cryptocurrency and stocks are both types of investments, they individually carry certain functionalities that make them different from the other. When you buy a stock, you are directly investing in a particular company that you believe will bring growth. On the other hand, you just buy tokens of a certain cryptocurrency to either use them as a digital investment portal or even trade them as payment. Cryptocurrency maker and stock distributor. One of the reasons for cryptocurrency's undying popularity is its independent and decentralized nature. Owing to its leniency, anybody can become a miner and try getting their hands on Bitcoin. Besides, other cryptocurrencies like Dogecoin were literally born out of bored programmers who wanted to mock the meme. It is completely different for the stock market. Stocks need to be created. They have to be cleared by government agencies and should also be audited. Stocks are encrypted from hacks while cryptos are not. As mentioned above, the stock market is widely regulated by government agencies and goes through complete yearly auditing. Due to its heavy scrutiny, there is little chance that stocks could be rigged or fraudulent. On the other hand, it is completely different for cryptocurrencies. Because of their decentralized nature, digital currencies are unregulated and prone to fraud. A simple cryptocurrency scam could make you lose all your digital assets. The void in ownership rights. Stocks are seen as an ownership right, similar to voting and citizenship card. Stock ownership doesn't change until the owner prefers to sell the stock. When he or she invests in stocks, they are allocated with a percentage of ownership in the company. In the digital currency market, you are allocated with tokens like Ethereum, Bitcoin, etc. when you invest in it. They do not represent a legal stake in the organization that issued them. The difference in transaction fees. Whenever you buy a new stock, even for a very less amount, you are bound to pay a transaction fee. While it is convincingly okay for large investments, transaction fees on small investments will eat up your profits from the stock. But trading cryptocurrency could be remarkably rewarding as it comes with low exchange fees. However, the transaction and gas fees vary based on the crypto exchange you opt for. When comparing cryptocurrency versus the stock market, it's important to remember that they're very different assets that play potentially different roles within a portfolio. The right mix for you depends on your personal risk tolerance, financial goals, and current financial picture. Each of these investments has pros and cons and different risk profiles. Before you choose which the best investment for you is, talk with your financial advisor and get a clear picture of your investment objectives and risk tolerance, along with your investment time horizon. In a nutshell, cryptocurrency offers high risk and high reward. Stocks are a good long-term investment but risky over the short run, and real estate investment trusts generally provide consistent income with the potential for long-term capital gains. Thank you for watching. Don't forget to subscribe to the channel. See you in the next video.